looking at trying to give investors some ideas of how they can get a sense of maybe how the market's looking, if we've got kind of maybe momentum or steam kind of coming in or out of the market, is we can look at a 200-day moving average. Now, we oftentimes look at 200-day moving averages from a specific stock perspective to see how it's trending based on its kind of 1 year's worth of range. Well, we've got an indicator, and let's kind of jump into the chart. We've got an indicator that shows us kind of the stocks on the S&P 500 themselves, how many of them are trading over that specific 200-day moving average. We can see kind of that April timeframe that I mentioned earlier was really low. We've kind of bounced up towards the higher range. When we can see this, similar to like a resistance points that we might see on a stock chart, we can see that the most we're typically seeing is lately is around 65% of the companies that have been trading above that 200-day moving average. But we're starting to see kind of consolidating down towards that 50% level. What's that saying? Only half of the companies are trading over their 200-day average when we're thinking about kind of full bullish or bearish territory. And we'll kind of add an interesting wrinkle to this. What I want to do is add in I'm going to add a comparison of the S&P 500 index to kind of see it's actually running kind of counter to that. Many might think, why might that be? And that's obviously probably some of the weighting we've talked about NVIDIA on the show, very, very, very regularly. It makes up, along with many of the other Mag 7 companies, the weighting of that S&P 500 is showing that. But now that we can see, kind of some of the broader market kind of pulling back off of their highs and actually starting to trade, almost 50% trading below that average, we might be seeing some of the steam and some of the tailwinds kind of coming out of the market. So we could look to see if we get a little pullback coming back, but times will tell, right? There's certainly not a crystal ball here. We're looking to read the signs as they continue to evolve.